Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, January the 3rd. The year's 2024. Let's talk trading. Looking at versus looking for, part 2 with WALMAL. These videos are for educational purposes only. Your results may differ from mine and differ from WALMAL. WALMAL, Happy New Year to you.
To you as well, sir, and to everybody else that's out there that may be listening.
Yeah. So we were talking this morning about, manufacturing trades and how many things the brain can handle at once. So I wanted to get your take on the looking for versus looking at. Oh, and by the way, I got out of that trade with point one.
Hey, that is a negative .1.
Yeah, I know.
Yeah, but it's an interesting topic. Looking for, looking at, and the way I define it, it may be a little bit different than you. I'm not sure, but we'll find out. But looking at is looking at the charts and taking trades because of what you see on the chart. You're looking at the chart, seeing what's happening with price action. You're seeing how that's affecting the market. Is it moving quickly? Is it moving slowly? Is it stagnant? Is it you had brought up the topic before, or the idea before, hey, we got a flat top, all it's doing is it's hitting the exact same spot and bouncing off of it, and yet if we look at the bottom side, all the candles are starting to rise up. The old days, if you did candle patterns, you call that a wedge, but the whole idea is that, well, eventually that flat top is going to go and break, and when it breaks, it's going to break up, break in the upward direction. And generally speaking, it does. Does it do it all the time? No, of course not. But the whole idea is that you're looking at the chart and you're seeing what's happening, and that's a good thing, especially if you also look at your trading plan, look at your trading plan, and take notice that, hey, that's one of the ways that I can go and trade. That's a methodology that I have taken akin to, and I'm going to trade that method. As opposed to looking for, and it's sort of like, okay, we're sitting in a pattern, the market's not really doing much, we need to be doing something, my hands are twiddling around, I'm not making any money today, and so you start looking for a trade. The problem with by the way, we had that little flat top I was just talking about, and we just broke above it.
Right.
Isn't that nice? I'm looking at the 1 and 5 minute charts in both of them, but in any case, you're looking for a trade. The problem with looking for a trade is I can always find a reason to take a trade. give me a chart, and I can always find a reason to take a trade. And the problem is, does that align with my trading plan? Is the reason I'm taking a trade there because that lines up with whatever method strategy that I've put in place for my trading plan? And the problem is that normally when we're looking for a trade, generally speaking, that's usually not true. Now it may align, from time to time, but a lot of times it doesn't. And then all of a sudden you're wondering, how did I get into this mess where I'm now down 10 bips? Well, reality is you manufactured a trade, and you wind up going and doing things that you probably should have done. And along the same lines of looking for, I don't know how many methods you've put out there, TRO, but it's just a ton of different methods. Your brain can't go and function on that level with all those different methods. It's just not possible, And I know you've taken some criticism through the years. Look at this guy. Look at all the methods. He's just bouncing from method to method. It's just things that you observed, and you're just making note of it. Hey, this is an observation that I've seen the market do. And it's up to you as the trader to take that observation and make a determination whether or not this is something I can turn into a method. Because you're not really giving a method as much as an observation. And I think that's where people get into trouble sometimes, is that they don't see that distinction. So, the problem is if we're looking for trades, I can look at the what seems like 1,000 different indicators that TRO has put out there over the years, and therefore I can find a reason to take the trade. You know, I can look at this chart right now. I've got a 5 minute going up, got 1 minute's going up. You know, I've got green from M1 all the way to H, actually to D1. You know, and I can find a reason to go short here. You know, if I look hard enough, I can find a reason. Just give me a little bit of time. I'll find a reason to go short here. Meanwhile, everything is screaming from my methodology, screams that, okay, I missed the trade. I do nothing right now. That's what my methodology say. You know, and we have to be careful with that and recognize that, you know, we have to look at the chart and make a determination of what we're going to do by looking at what is happening as opposed to looking for what could happen. I don't care about what could happen. All I care about is what's happening right now on the chart and actually making a determination based on that. That's my 2 cents on the idea anyway.
Yeah, it's funny because, you know, I've kind of gone old school, going back to using the previous midpoint as a entry, as a bias and an entry. You know, price is above previous mid, you're long. If it's below, you're short. Similar to the EMA 5 or indicator 2. But, you know, one thing I was thinking or reflecting on when you're talking about all those methods, you know, you're pretty much describing entry methods. When we talk about methods and systems, but the thing is, and I've said it before, once you get in the trade, the entry doesn't matter. It's like, it's what do you do, you know, to exit? Do you exit with a profit if the market smiles upon you, or do you manage to trade and only lose what you're willing to trade or willing to lose on a trade? I think that's, you know, that's the big one. See here, that trade that I got at with 0.1, I'd be up about 6 pips right now. But I took you know, when you were talking about, you know, you see yourself down 10 pips. Yeah, I was down 10 pips. But, you know, the funny thing is, in the grand scheme of things, is something I don't think as Forex traders we really think about. What is 10 pips in real money? You know? It's what, a tenth of a penny? Is that what it is?
Something ridiculous like that. But, you know, but the thing is, how much have you leveraged it? That's what gets you into trouble.
Right.
You know, but look at, you know, I was talking about it earlier, you know, you got the flat tops and the, you know, and the higher lows, you know, and look at that now. We're up 10 pips from where I called that out.
Yeah. Like I said, the H4 open, we're 10.4, well, we were 10.4 pips above it. And we're into the launch pad.
Yeah, I mean, would have been a beautiful trade. But the thing is, you know, is that something that I do? Yeah, it is something that I do. It's part of my trading plan. So that would have been a legitimate trade to go and take, especially since it happened out of flip-flop box. That's, you know, the beauty about it all. But if you would have taken the first time it happened, it would have failed on you. Taken second opportunity, it would have failed on you. Third opportunity, big money, you know. And but the thing is, it comes down to, again, you know, I got to say it on every video, sir, and that is you got to go and manage your risk. Because if you managed your risk properly, those 2 losses wouldn't have mattered.
Yeah.
Because either you would have gotten in with only a little bit of leverage, you know, and on the first 2 trades, and therefore when it happened the third time, you still could have gone in and you wouldn't have gotten out on the first 2. Now you would have had 3 times big money. But someday we'll have to go and explain that a little bit more, because I don't think we have the time to get into that right now.
You know, I just noticed something. Okay, I've got your template up with and it has the state change bars on it. I just realized once a bar is an outside bar, state can't change on that bar. But the other ones that could, until it closes, you don't know if it's going to hold that state. But I just noticed that we had a flip-flop off of that outside bar 2 minutes ago, and that would have been worth 2 or 3 pips.
Right. would have been a beautiful trade, to go take that. Because what's nice about it is that it would have been, if you put it in your TP, at the entry, of 2 pips, it would have been just a quick and dirty trade in and out, in a minute. Less than a minute even. And if it would have held, you would have been up, probably 3-4 pips now.
Yeah.
My chart would have been up 3.5, 4
But
pips.
yeah, it's funny though when you said that, if you wanted to, you could find a reason to go short, and there was your reason. You had a flip-flop box, you had an outside bar trigger, and to the south.
You can always find it. There's always a reason, And that's the thing that, that I just want traders to really, from this little talk, to go and take hold of. Don't panic that you don't see a trade right now. That may be a good thing that you don't see a trade right now, because that may mean that the market's not doing what you would expect it to be doing, and because it's not doing what you expect it to be doing, sit on your hands. There'll be another train coming down the track. Just wait for, you gotta have to be disciplined and wait for it, and that's the whole thing about this trading game is just this whole idea of discipline, because you got to be disciplined enough to go and sit there and wait for your trade. You look at the chart, and when your trade comes down the track, you take your trade and you take your trades, okay? And then you got to be disciplined to do all of that. Then what you got to do is you got to be disciplined to get out of your trade when it's time to get out, either because it's gone against you, or because the trade is played out, and that's what this game is. You got to be disciplined. If you're a guy that's just, spontaneous, and that's me, that's my personality. I'm a very spontaneous type of person, and I've had to learn to put all types of rules in front of me to prevent me from hurting myself. And and if that's who you are, you got to do the same thing. If that means, if you're a type of person that's always looking at other things, too many things, and get distracted very easily. Well, you know what? Put the chart up on the screen. Disable your browser, disable everything else around. Sit in a room that's only got white walls, no windows. Whatever you got to do, it's kind of. I'm kind of saying it's tongue in cheek. But the reality is that that's what we have to do to make sure that we stay focused, and that's what we have to do. Maybe for you to stay focused, go play some classical music in the background. I don't know. It could be anything. I know other guys who, that play, heavy rock music because it keeps them in a rhythm. You got to figure that out for yourself. That's the thing, guys, that we got to figure out. You got to figure yourself out. It gets back into that psychology thing again, because you're the only person that can figure you out. People can help you and guide you. They can't fast walk you to it.
Yeah.
You got to do that.
And it's interesting here. We had 3 lower bars in a row. Then we had an inside bar, and then all of a sudden this bar broke out of that flip-flop high, and that was good for a couple of pips.
Yep. And if you look at it, if you think about it, you had your buzzard reversal in there, so there's another reason for taking a trade. But the thing is, that is not part of what I do. And so, yeah, I recognize it, I see it. I'm not going to trade it. Why? Because it's just not what I do as part of my methodology. And so that gets down to it. And the problem is, if you start trying to do everything that's out there that's possible, you're going to get confused. You're going to start conflating things. I think that's the word I used before with you. You're going to start conflating methods together, and then you're going to have a real mess on the end.
Yeah, and you know what, fellow traders? The fastest 15 minutes in trading is just about over. So I hope you got something from what WALMAL was talking about, looking for versus looking at. So let us know what you look for when you're trading, or what you're looking at, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.